Hello, everyone. Want to make sure you guys can hear me out there. I'm coming to you live. It is Tuesday, which is time for my Tax Talk Tuesdays at 2 o'clock. And, I always try to have integrity with my words, so I wanted to start on time directly at 2. So if you're out there, you can hear me. If you can just drop your name in the comment section, let me know you're here, you're excited. If you're not excited, I'm actually excited because I have some very good information that I'm ready to share with you today. And the reason why I chose this topic, actually, you know what, before I talk about the topic, let me just kind of share with you who I am. My name is Beverly Winstead. I am a tax resolutions attorney, and I've been practicing tax law, helping clients that owe the IRS money, helping them get out of trouble with the IRS. If you're going through an audit, I help you with that. As well as if you're in tax court, I also help with that. So the reason why I decided to do these Tax Talk Tuesdays at 2 is because I've spent over a decade, really working solely as a tax controversy attorney and helping people when they are in trouble with the IRS. And I have so much information that I really just wanted to share it with you guys so that, you actually don't have to come see me. That's what I'm hoping. That's my goal. So again, my name is Beverly Winstead. So last week I did a talk on getting you prepared for tax day. So tax day, IRS announced last week that tax season officially opens January 29th. Yay. Somebody say, show me the money. Show me the money, because that's what I hope you guys are going to get back this year and not owe. So last week I did a talk on, I see Cassandra has joined in, Lakia. Thank you guys. George Pettiford, thank you guys. Michael Shotwell all the way from North Carolina. So I see a lot of North Carolina folks are on this. Oh, Melissa are on this live. So do me a favor, if you are watching and if some information that I share with you is you think will be beneficial to somebody that you know, if you can also just click the share button, that way that they can get this information. I'm a firm believer that, each one teach one. We have to grow, teach, and repeat. Again, grow, teach, and repeat. So, hi, Rodney. How are you? Brent, I see that you're on. So let's go ahead and get started. Today, I'm going to share with you 5 common mistakes that people make when filing their tax returns. So somebody say 5. That's what I'm going to share. I'm going to share 5 with you. Okay. So the first one, starting with number 1, people make is they forget to report all their income. I know you're asking, how in the world does that happen? Like, how can you forget how much money you made and forget that you're supposed to report this income? It happens. It happens. So things that are considered income. The other thing I'm going to do actually what I try to do is give you the rule and give you a tip so that once you get the rule, you'll have a tip to kind of figure out how to handle each situation. So income, W-2s, 1099s, interest income, all those things are taxable. Cancellation of debt are taxable. A lot of people don't know that when you get, let's say you have a credit card that you owe money on, and you can't afford to pay for your bill. So you go to the credit card company and you say, hey, credit card company, American Express, I can't afford to pay this. American Express reluctantly cancels the debt. When they cancel the debt, they'll send you what's called a 1099-C. That 1099 gets reported to IRS and they will send you a copy. When you file your tax return, you have to report that canceled debt as income. Unless, and this is where you have to go through some type of calculation to determine whether or not you actually should pay tax on it. The calculation that we normally do is what's called an insolvency exception. An insolvency exception prevents you from having to pay taxes on that canceled debt. So how do you know if you're insolvent? So insolvent basically means that your liabilities exceed your assets. Oh, okay. Some of you guys are like, whoa, that's still, you still don't understand. So let me break it down a little bit more. What it means is that when you're insolvent, the debts that you owe to people exceed the things that you have of value. So the things that you may have of value may be your car, the money in your bank account, your retirement accounts. They are less than what you owe people, like your car note, your mortgage, your student loans. I know a lot of people out there have student loans, okay? Trust me, I understand. So if your liabilities exceed your assets, then you don't have to, that's any canceled debt income is actually not income. You don't have to report on your tax return. So one of the things I do as a tip to make sure that I don't forget any of my documents. So around this time in January, people are beginning to send you the W-2s, your mortgage statements, your interest statements. What I do is I create this folder here. It's called tax docs. I write on it tax docs so that as my documents come in, I just go ahead and let's say this comes in the mail, I just stick it in this tax doc. That way, when I'm getting ready to take it to my CPA or my attorney or whoever's preparing my tax return, or even if I'm preparing my own tax return, I already have it organized. Like I'm not hunting the house looking for documents. Because a lot of times they'll say to me, Attorney Winstead, I had the document, but I can't find it anymore. So make sure you do, whether it's a folder or envelope, so as things come in, All right. That's fine. All right. So number 2, another thing we see as tax professionals is people claiming the incorrect filing status. So there are 5 filing statuses. You have head of household, single, married filing jointly, married filing separately, and qualifying widower. So how do you know the difference? So an easy way to kind of remember it is, do I have a dependent? If you have a dependent, there's really only 2, there's possibly 4 filing statuses if you have a dependent, but there's definitely 2. If you have a dependent, then head of household, qualifying widower are both possible filing statuses, as well as married filing jointly and married filing separately. Okay. Now, what about if you're married? If you are married, then what you want to do is, there's really possibly only 3 filing statuses if you're married. Married filing separately, married filing jointly, and possibly head of household. So how do you know whether or not you can file head of household if you're married? So the general rule is that you have to have a dependent and you have to maintain a separate residence. Okay? So sometimes people may be going through a separation and they decide to live in separate residences. So therefore, they should file head of household. So I want to acknowledge a few more people that just joined in. Damien, I know you're down there in Virginia, rocking things with basketball. So keep doing what you're doing. Appreciate you for joining. Langston Logan, grew up together. Thank you guys for joining. Maurice Johnson, a lot of my friends in North Carolina I see are on this. Bobby Johnson. So let's get back to basically what I'm sharing with you, 5 common mistakes that I see when people are filing their tax returns. So the third thing I see is failing to claim all your eligible tax deductions. Let me tell you something, folks. This drives me crazy, all right? Because you are entitled to certain tax deductions, and if you don't take advantage of it, then, I'll say this. A lot of times you don't know what the law is, so you can't really take advantage of it. So I'm going to try to break it down quickly. So number 3, what you want to do is when you talk about eligible tax deductions, you can either file standard deduction or itemized. All right, standard deduction is something that's given to you by law. Itemized is most people that itemize, they have mortgage interest, real estate taxes, charitable contributions that they've given away, They have unreimbursed employee expenses. Now, this here is really the area where a lot of people don't claim things that they possibly should be entitled to. So things that they are entitled to, particularly when it comes to mileage. So let's say, particularly if you have two jobs. If you have two jobs, sometimes what we see that people forget to claim is the mileage. Did you know that when you have two jobs and you travel from one job to the second job, you can actually deduct that mileage from the first job to the second job? Or if you have one job and you're in school, so you travel from your first job to school, that mileage you can deduct. So you want to make sure you capture that. If you pay a tax preparer to prepare your tax return, you can possibly deduct that. If you pay me as an attorney or CPA to help you get out of tax problems, then those attorney fees are actually tax deductible on a Schedule A. So you want to make sure you're having these conversations with whoever is preparing your tax returns. Even if you don't know whether or not you qualify for it, that's why, it's good to have a good relationship with a tax advisor, because they can share with you, hey, you know what, you do qualify for that. You should be able to claim that. Let's go ahead and claim it. Another area we see for people that have businesses. All right. A lot of times people forget to bring in all their receipts. So I understand that, some businesses definitely, I always kind of recommend QuickBooks for businesses, particularly if you're ongoing. But if you're in a situation where you're just starting up and you kind of don't know whether or not you're going to be a business or whether or not it's really a hobby, but you have purchased some things and you want to make sure, and you have the receipts. What I like to do is really to make sure that I have all my receipts throughout the year. This is another tip I'm going to give you. I get Ziploc bags, right? I get Ziploc bags. I get 12 Ziploc bags, right? January, February, March, April, May, June, July, August, September, October, November, December. And each month, because as entrepreneurs, we're so busy, we don't have time to kind of go through and organize and do all the stuff that's really necessary. And some of us may not be able to afford a bookkeeper. So what you want to do is, at the beginning of the year, get you 12 Ziploc bags, put all your receipts as you come in January, just throw it in the Ziploc bag. So by the end of the year, each month, you can go back and do your reconciliation of whatever your expenses are. All right. So I've taken you through three common mistakes right now. All right. So remember, I said I was going to share 5, which means I have 2 more that I'm going to share with you. So the 4th one is failing to claim the appropriate health care exemptions. And we all know that the Affordable Care Act was passed a couple years ago. And under the Affordable Care Act, you're mandated to have health insurance. If you don't have health insurance, you will be penalized, unless you fall within an exemption. So how do you prevent yourself from being penalized? So certain exemptions fall into different categories. It could be income-based exemptions. It can be that you're the lowest affordable plan in the marketplace. Once you do your research, it's still unaffordable to you. That's another exemption. And then also, if you have a short-term gap in coverage, that also is an exemption. So you want to make sure that you qualify, if you qualify for any of the exemptions, that you take advantage of the exemptions, right? You want to make sure you report that. Because what happens is a lot of times we see people don't claim the exemptions, and then they also don't do the reconciliation on the advanced premium tax credit. The advanced premium tax credit, if you qualify for it, then, which is an advance payment that the government gives you to help you be able to afford the tax return. To be able to afford the health insurance. I got tax returns on my mind because I just talked about it. Tax filing season starting in less than 2 weeks, right? So you want to make sure that you qualify and do the reconciliation on the advanced premium tax credit. Okay, so now I'm coming down to number 5. All right. And this right here is, I got to tell you people, this here is what I see a lot in terms of a mistake. And I want to make sure at the very least, if none of these other 4 apply to you, you want to make sure that you're aware of number 5. Number 5 is taxes are due. Everybody knows when. You can go ahead and put it in the comment section. Taxes are due April 15th. We all know that, right? So a lot of times people may wait until after the 15th because they don't have all their documents. I don't want you to wait. What I want you to do is, if you don't have all your documents, or if you're not prepared or ready to file your tax returns on April 15th, make sure you file an extension. You want to file an extension because what an extension does is it gives you an automatic 6 months. Automatic 6 months to organize your documents, to give it to your tax advisor, or to buy your software and do the tax return yourself in order to meet the October 15th filing deadline. What happens if you file an extension or you don't file an extension and April 15th gets here? So you file the extension, but even though you file the extension, remember the extension is on the extension to file, not an extension to pay. So the mistake that I want to make sure that you don't make is, I want you to, even when you file that extension, try to pay as much as the tax as possible. Because IRS will assess you late filing penalties and late payment of tax penalties if you don't pay your correct amount of tax by April 15th. Now I know what you're asking. How in the world can I know how much taxes that I am supposed to pay if I haven't done my tax return? Well, IRS is saying, look, you need to estimate as much as possible. Because if you don't, we are definitely going to hit you with penalties. Now remember the movie, some of you guys may have seen Jerry Maguire, and Cooper Gooding Jr., he was in there and he kept saying, show me the money, show me the money, show me. That's kind of how I feel about IRS. That's what they're saying on April 15th. Look, at the end of the day, folks, they want their money on April 15th. So in order for you not to be assessed that additional penalty, definitely try to pay the taxes by April 15th and file the extension. Same goes for the state. All right? I see a couple other people have joined. Jerome Stevens, how are you? Saxon Downey, Tara, a lot of my people from colleagues. I appreciate you guys joining in. If I said something that you guys think may be beneficial or helpful to someone else, then if you wouldn't mind just clicking the share button, because as I said when I first got on here, I've spent a decade building, my knowledge and my expertise. And, I just want to make sure that we try to get as much information out as possible to help other people so that they don't have to come see me and, pay me to help them get out of tax trouble. All right. And quick thing, I also run, I have a tax practice here in Lowell and Maryland, but I also run the tax clinic at the University of Maryland. So if you know anyone who can't afford an attorney who's in kind of like the low income threshold, low income being they make $30,000 or less as a single individual, $40,000 or less as a, like I said, as a 2-person household, then definitely have them reach out to us at the law school. That number is 410-706-3295. Again, 410-706-3295. If you are outside of that income level because you make more money, then feel free to connect with me. You can give me a call at 301-306-1234. You can also follow me on Facebook. I have a fan page where I also share information. The page is Law Office of Beverly Winstead. And I look forward to, before I get off, I just want to see if anybody has any final questions. Within the next couple of weeks, I will be, see my phone is ringing. the next couple of weeks, I will be reviewing, sharing with you information on the new tax bill. So I definitely want to get that information out to you. Okay? All right. Well, thank you guys so much for joining in. I will see you next Tuesday at 2 o'clock for Tax Talk Tuesdays. Thank you.